The year is 2025. The global economy teeters on a knife's edge. The United States and China, the world's two largest economies, are locked in a perilous trade war. This is not just about tariffs or trade deficits. It's a battle for global dominance, a new Cold War fought with economic weapons. This clash of titans threatens to shatter the fragile fabric of global trade and plunge the world into chaos. The roots of this conflict run deep. For years, tensions have simmered between the United States and China. The United States, long accustomed to being the world's economic hegemon, has watched with growing unease as China's economic might has surged. The U.S. trade deficit with China has ballooned, fueled by China's massive manufacturing capacity and its appetite for American goods. But the trade imbalance is just the tip of the iceberg. The United States has long accused China of unfair trade practices, alleging intellectual property theft and forced technology transfer. These accusations have created a climate of mistrust and resentment. Underlying this economic friction is a deeper geopolitical rivalry. China's rise as a global power has challenged the United States' dominance, leading to tensions in areas like security and influence. The opening salvos in this trade war were fired in 2018. The Trump administration, pursuing an America First agenda, imposed tariffs on billions of dollars worth of Chinese goods. China retaliated swiftly, slapping tariffs on key U.S. exports like soybeans and automobiles. The initial skirmishes have escalated into a full-blown trade war, with both sides imposing tariffs on a widening range of goods. The impact has been felt across the globe. Businesses have been forced to navigate disrupted supply chains and rising costs. Consumers are grappling with higher prices for everyday goods. The trade war has cast a long shadow over the global economy, fueling uncertainty and dampening investment. China's ace in the hole, U.S. Treasury bonds. These bonds are not just pieces of paper, they represent a significant portion of the financial relationship between the United States and China. You see, China holds a powerful weapon in this economic standoff, its vast holdings of U.S. Treasury bonds. These bonds are essentially loans that the U.S. government owes to its creditors, and China happens to be one of the largest. Now here's the thing. China is actually the largest foreign holder of U.S. debt, with trillions of dollars invested in U.S. Treasury securities. This isn't just a statistic, it's a reflection of how deeply intertwined the two economies are. This gives China significant leverage over the U.S. economy. It's like holding a key to a vault that could destabilize the financial system if used recklessly. And let's be honest, if China were to dump its U.S. Treasury holdings, it could send shockwaves through the global financial system. The ripple effects would be felt far and wide, from Wall Street to Main Street. Interest rates would likely skyrocket, making borrowing more expensive for businesses and individuals alike. And well, it could even trigger a recession, not just in the US, but potentially on a global scale. But here's the catch, it's a double-edged sword. While this move could hurt the US, it wouldn't leave China unscathed either. Such a move would also harm China's own economy. The value of its remaining US Treasury holdings would plummet, and its export-driven economy could face severe repercussions. So, using US debt as a weapon, it's a risky strategy. It's like playing with fire. Both sides could get burned. Yet it's one that China might be willing to consider, but only if pushed to the brink. The stakes are high, and the outcome of such a move would reshape the global economic landscape in ways we can only begin to imagine. A world held hostage, global interdependence. In today's interconnected world, no nation operates in isolation. Every decision, every policy, every trade agreement ripples across borders, affecting millions. The US-China trade war, well, it's not just some bilateral spat. It's a clash of two economic titans, each vying for dominance in a globalized economy. Its tremors are felt across the globe, and it really highlights just how interconnected the modern economy has become. From the smallest factory in Southeast Asia to the largest tech company in Silicon Valley, the ripple effects are undeniable. The US and China are deeply integrated into global supply chains. They're not just trading partners, they're the backbone of countless industries worldwide. Goods and services flow freely across borders, making the world economy more efficient, sure, but also, more vulnerable to disruption. A single policy change or tariff can send shockwaves through these intricate networks. The trade war has exposed the fragility of this system. It's a stark reminder of how dependent we've become on this delicate balance. When two economic giants clash like this, the collateral damage? It's widespread. It's not just about numbers on a spreadsheet, it's about real people, real businesses, and real livelihoods. Countries that rely on exports to either the US or China have seen their economies take a hit. For some, it's a matter of survival as industries struggle to adapt to the new normal. And let's not forget, the trade war has fueled a lot of uncertainty in global markets. Investors are cautious, and businesses are treading carefully. Businesses are hesitant to invest, they're holding back on hiring. It's a ripple effect that's hard to ignore. The uncertainty doesn't just affect the present, it casts a long shadow over the future, making recovery an uphill battle for many. The brink of chaos, escalation and its discontents, the current trajectory of the US-China trade war, it's frankly, deeply concerning. If both sides keep escalating tariffs and other protectionist measures, well, the consequences could be dire. A full-blown trade war could even plunge the global economy into a recession. But it doesn't stop there. The trade war risks spilling over into other areas of conflict like cybersecurity or even geopolitical rivalries. And, something that was once unthinkable, a decoupling of the US and Chinese economies, it's now a real possibility. Such a decoupling would be economically damaging, no question. But it would also be geopolitically destabilizing. It would fragment the global economy, stifle innovation, and honestly, increase the risk of conflict. A call for wisdom, diplomacy over destruction. In a world increasingly interconnected, the stakes of conflict between major powers like the US and China extend far beyond their borders. It's not just about two nations, it's about the global community. The US-China trade war, well, it's a lose-lose proposition. Billions of dollars are at stake, and the ripple effects are felt in every corner of the world, from small businesses to multinational corporations. Both sides, honestly, the whole world stand to lose if this conflict keeps escalating. Supply chains are disrupted, markets are destabilized, and trust between nations erodes. The consequences? They're not just economic, they're deeply human. The path forward? It requires de-escalation, a return to dialogue. It's about finding common ground, even when the differences seem insurmountable. History has shown us that diplomacy, though challenging, is always the better alternative to prolonged conflict. Both sides need to show restraint, pragmatism, and, most importantly, a willingness to compromise. It's not about winning or losing. It's about creating a framework where both nations and the world can thrive. Resolving this trade war, it's no small task. It demands patience, persistence, and a genuine commitment to understanding the other side's perspective. It'll mean addressing the legitimate concerns on both sides. For the US, this includes ensuring fair trade practices and protecting its industries from unfair competition. The US needs to tackle its trade deficit with China and ensure a level playing field for American businesses. This isn't just about numbers, it's about livelihoods, innovation, and the future of industries. China, on the other hand, needs to be more transparent about its economic practices and, address concerns about intellectual property theft. Building trust is key, and that starts with accountability and openness. The world is watching, and let's face it, the stakes are incredibly high. This isn't just a bilateral issue, it's a global one. The decisions made here will shape the economic and political landscape for decades to come. The time for brinkmanship? It's over. The world can't afford the consequences of prolonged hostility. It's time to prioritize collaboration over confrontation. What the world needs now is leadership, diplomacy, and a shared vision for a more prosperous and stable future. It's about building bridges, not walls. Because honestly, the alternative, it's just too grim to even contemplate. A fractured world benefits no one. The choice is clear: diplomacy over destruction.